Have you ever heard the term be diversified in your investment? Are you honestly diversified? Do you have an honest diversification throughout all the asset classes that can protect your wealth? I wanted to share with you a little video about your retirement, and I'm going to make this video as short as possible. Just please hear me out when you listen to this video. Just ask yourself a few questions. How safe is your portfolio? How diversified is your portfolio? Does your assets go beyond just cash, stocks, and bonds? And the reason I wanted to make this video, because if you retire, lucky enough to retire at 60, and you live till you're 90, that's a 30-year period that you're retired. And throughout asset classes, you might be doing really well one day or 1 year in your stocks, but another year you could be doing terrible. If you live 30 years, you could see cycles between many different asset classes. So I just wanted to show you a little bit why you should be fully diversified in your investments. So I'm just going to draw a chart here, just talking about asset classes between 2000 and 2007. And it's mainly talking about the value of them, not really the price, but the value of them. So let's just draw out a few asset classes here. You have your regular cash, stocks, and bonds. Real estate is definitely a good asset class. Precious metals is another asset class. I have the one on the end there, hybrid asset classes. That's what I consider like fine wine, fine art, watches, collectibles, collectible cars. That's why I call hybrid investing. It has different words for different people. But let's just take a look and let's just see perceived value between 2000 and 2007. This is what I take as the market as a whole. So it's not going to be any isolated incidences or isolated stocks, but this is how I perceive the markets between those years. The dollar index was a medium range. It was doing all right. It was with inflation going down, but compared to other currencies, the dollar index was doing very well. Stocks seemed to be doing very, very well. Because stocks were doing so well, not as many people were into bonds. So bonds were doing all right, but they weren't doing as well as other asset classes. The main one between 2000 and 2007 I saw as real estate. That was something you could never go wrong on. The prices of real estate between this time was going up and up and up. Precious metals, they were doing an increase, but definitely not as fast as any other of these asset classes. And I feel there's always a market for a hybrid. There's always somebody that wants a collectible and has money just to waste. So here is the asset classes between 2000 and 2007. Let's just take a look at the current and the future here at asset classes, how I perceive them. I feel the dollar index is very, very down. I feel stocks are very high up, but I'm going to talk little bit more about that. Bonds are doing all right because people feel they have nowhere else to put their money. The main big loser was the big winner in the last page, but the big loser is real estate. No matter what they're doing, no matter what tax credits or law changes they're making, people who have real estate as their investment are really losing out. Precious metals have continually gone up, and I know that anyone watching this video, if you believe in precious metals or not, you have known that they have done really well over the last few years. And then hybrid investment, I find it's getting more attention just because people don't know where else to put their cash. The reason I wanted to show you this, because if you live between your 60 and 90, between 30 years, you're going to see your investments be overvalued and undervalued. So what you want to do is time it as well as you can. When something is overvalued, that's when you want to sell. When something's undervalued, that's the asset classes you want to hold on to, waiting 5-10 years until it becomes a little more overvalued so you can sell it. I am right now a precious metals person. That's what I do for investing and saving my money right now. Because the interest rates are at 0% right now, I don't feel these numbers in stocks and cash and bonds, real estate are that real. They're not really showing the true picture of the markets. 0% interest is not a real market to me. So that's why I put all of my money right now in precious metals. And it's the asset class that I am in right now. So I invite you to do the same. Put some money in precious metals, because when you retire, you could live 30 years. You would want, over that 30-year period, precious metals in your portfolio. Ask anyone now that's ages 60 or 70 if they wish they had precious metals in their portfolio if they haven't already. They will all say yes. It's just an asset class that wasn't that popular over the last 20 years, but now the last few years, it's done really, really well. So anyone doing investing over the 80s, 90s, 2000s would not think of precious metals because they have not done that well comparatively to other stocks. I think everyone should have precious metals in their portfolio. They are safe. You buy them tax free right now. You can sell them tax free, and it's always has value. There's no way a precious metal is going to lose its value like a tech stock in 2000. That's why I feel everyone should have at least a little bit of precious metals in their portfolio. Even if you think gold and silver are dumb, ask somebody right now that's 65 if they think gold and silver are a dumb investment. They probably wish they had some more in their portfolio. So I just wanted to make this video to show you different asset classes. And if you had any questions, please feel free to contact me. But also, if you want to click the link below in the show notes, you'll be brought to a place, my blog, where you can learn a little bit more about buying gold and silver. Very safe and very secure and at a good price. Hope you guys all have a good day.